Federal Reserve leaving rates unchanged at 5.25% to 5.5%, but making big changes to the statement. The statement twice mentions the possibility of changing the funds rate, setting out the circumstances for those rate cuts that maybe are nebulous, but maybe even a bit hawkish, depends on where you come from. I want to read you the statement that says here, the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. It later says inflation has eased, but that it remains elevated. So it's saying the committee will only cut rates when it's confident inflation is moving to the 2% target. No mention in the statement of whether it has that confidence. The statement also says, quote, in considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee removed that bias that was in there for hiking, where it talked about additional firming. That's no longer in the statement. The risks to achieving its dual mandate, the Fed says, quote, are moving into better balance. On the economy, there was an upgrade saying it's expanding at a solid pace. Had said it was slowing in the prior statement. Job gains, it says, has moderated but remains strong. And it removed a section on concerns about the impact of tightening credit conditions. That's gone from the statement. It also removed a section on accounting for prior tightening and monetary lags. It was a unanimous decision with new voters Barkin, Daly, and Bostic and Mester voting as well. So cuts, guys, are obviously in play, but the Fed at best is not telegraphing any timing around it or amount. And you could be ready to suggest those cuts may come later than the markets now expect. Tyler?
Hey, Steve, if you look at the statement, the key phrase that everybody was watching for was the one that you mentioned, right? Which was in previous statements, quote, in determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, ... They've gotten rid of that. On balance, that should seem like it's net positive in terms of clearing the path for or opening the door a crack for interest rate cuts. Yet the markets did react marginally negative to this bit of news. Is that maybe fair to say, then, that the markets were already ahead of itself with regard to how many and to what extent rates would be cut in 2024?
I think that's a good assessment, Dom. I always dislike the idea of gauging the market reaction right after the statement comes out. I think there's some black box trading that's problematic. But here's the thing. Removing that statement, Dom, was the ante. Everybody thought that was going to be gone or changed in a way that was no longer going to essentially telegraph additional rate hikes. The question was, what did we get, Dom, when it came to telegraphing of cuts? We got a little bit. They mentioned the idea of changing the policies, changing the rate twice, once in terms of reduction. But remember, that reduction idea is in negative terms, as in we're not reducing it until we're confident, essentially, that we're heading back towards 2% on a sustainable basis.
Bob, I want to go to you, Bob Pisani, for the market reaction here. Obviously, immediate reaction. I know Steve expressed some concern about black box trading, but it does look like the S&P 500 at least took a little bit of a leg down here. What are you seeing?
You don't need black box trading for this. This is very clear. Powell, there is no reason for Powell to give up strategic ambiguity on the rate cuts. That's exactly what he has done here. Remember, everyone was expecting some kind of timing that was very, very clear. Back in December, they were expecting 90% plus chances of a rate cut in March. The market's come down. Now it's 50%. It's going to go down a lot more after this one here. So I know the bulls have been arguing that, oh, we have disinflation, therefore real rates are higher, therefore the Fed should be more comfortable cutting. The problem here, which I think the Fed has acknowledged, is the Fed usually cuts when there's economic distress, and there is no signs of economic distress. So you've got a tension here. And I think Powell is the FOMC is acknowledging that with the strong comment on the economy here. So the question is this: could the market handle fewer rate cuts with a strong economy? I think it can, but this kind of aggressive statement was a little bit of a surprise for the market.